Welcome back to yet another episode on Markets Kya Lagta Hai. Today is 6th of October. It's around 6 o'clock in the evening here, and I'm doing this recording. Very excited, very excited. I received a lot of feedback who watched this last week's video saying our prediction was exactly where it really talked about. We will talk about that. But first things first, let's quickly look at today's recommended options trade. And this is the trade that I am recommending. It's a bear call spread. So you write 17,500 CE and you buy 18,000 CE as a insurance. The total margin is around 42,300 and you should be able to take home about 3,400 rupees, which is 8% within a week, which is a beautiful thing. And it's a credit strategy. So you get this money today in your account and then you will have to repay if it goes against you. The strategy charts, the probability of the profit is around 70%. You are protected all the way upwards up to 1.36% to 17,568 rupees. So even if the strategy does not work as it is planned, you still have some time on your hand to adjust it. This is the last line is the strategy for this week, which is bear call 18 and 17.5. And this is the above table is the status as of today. So we have hit ratio of about almost near about 90%. Only one trade was wrong, and if we would have traded this, we would have earned around 20% on our capital, 19% to be precise. Or the profit percentage per week is a little above 3%. Not bad at all, right? So, with this out of our way, let us quickly look at the charts. That is what is the most important thing for us, right? Very simple. So if you look at this chart, and let me just zoom in a little bit on this and move it little above. We had expected that the markets would turn around here. Last week we were somewhere here around 16,800 odd levels, and markets did honor us. So thanks to markets. And then we had our target of around 17,350, and markets chose to do little more than that, 17,400. Again, thanks to the market for honoring us exact with the exact levels, very close. I mean, it could it have been better than this? Okay, so and now today. I am expecting the turnaround story to continue, and then markets to start going southwest. And the eventual target is around 16,570 rupees. Okay. Will it happen immediately? Will it happen in straight line? I don't know. It may happen slowly, but I don't believe the markets to go beyond 17,500 on the upside. So 16,570 comes first before 17,500. And that is exactly why I have recommended to write 17,500 CE. If you want to be more aggressive, you could also write 17,000 or even lower levels. That's up to you. Now, how did we reach here? Is the question. And I know that there are new people coming in every time, and they may want to just look at the bigger picture. So if I go to the daily, and I'm just initially going to show you a bigger picture. So we had this COVID fall, and after the COVID fall, we had a rally, and post this rally, we started with the correction. So I'm not talking about the rally; it's too old now. Within this correction, we had a five wave sequence: one, two, three, four, and five. This was a wave A, and then there was a wave B, which was made up of A, B, C, and in B you can again see A, B, C. Okay, so this was a C. I'm sorry, this was a B. And after this, you had a 5 series, 1, 2, 3, 4, and 5. This was again a 5 series sequence to complete the wave C. And those who are there on my WhatsApp group, they would know how accurately we predicted this. 15,200, 15,200 something was the target, and then from there it reversed, and we have seen a very nice, fantastic rally taking us very close to 18,000. Now, within that rally, this was an impulse. An impulse was made up of impulses within impulse. So the first one, the topmost, is the white one, and this is being formed. So I may make mistakes. If I make mistakes, I will have to recorrect it. So the white one is one, and then a two, and then a three, which was the high which we got mid of September. Okay, and this three was made up of the blue one, which is a one, two, three, four, and five. If you want to know the details, you can always go back to my earlier sessions and you would know. Most important thing is you learning, you understanding what's really happening in the market. Okay, and now let's talk about this fall. This fall, initially we thought it would be A, B, C, small correction, and then it would go up, but it did not. Markets showed a gap down and went against us, uh, which always can happen. But then we were able to target this level again very nicely and able to get this going. And now again the market seem to be obliging us. Let's see how it does. So if I would take you back to 75 minutes and show you some beautiful arrangements. So you already know that wave 3, the correction is between 50% and 60%, very nice within the box. Then if you do a Fibonacci projection of this A onto this C, I think I am accurate enough. So you would see that perfect 127 was right there. If I would do it correctly, it was around 17,420 levels, and that made me very confident. I already have taken this trade that I'm talking about, pair call strategy in my account. So you can see Fibonacci all across. For example, we have already looked at this Fibonacci. Wave 3 was around 161% of it. Let me just quickly plot it. I think it's already plotted. So this one. So if you look at it, this one was no, it is not plotted. Let me plot it. So this is where the wave one's actually little higher started, and then if you look at it, it was, oops, sorry, I made a mistake. Give me a second. This is where it starts from, and then when I project it on this, see, it was very perfectly at 161%, and that is what made me confident to go long here. And now we are again seeing same Fibonacci working our way. Will it continue? Am I so sure about it? I think 70% probability is fair bit to take the trade. If it goes wrong, I would just take my stop loss and say, fair, let's move on and take it forward from there. So going back to the presentation one more time. So if you look at it, this is the trade that we are recommending. Short 17,500 C and then buy 18,000 C against it as an insurance, and take home 3,400 for a margin of 42,000. You can always put more zeros to it. That's not a big problem. So with this, let me take a pause. Have a great trading week ahead and enjoy your trading. Hopefully, we will be making all these things. And please do share your feedback on YouTube. If you like the video, please share it with your friends. Do subscribe so that you can keep watching it again and again. Have a great time. Cheers. Bye.